ETH has a lot more transactions than Bitcoin, but they're smaller in value. So the total value being exchanged on ETH is actually less than Bitcoin, even though the number of participants is I don't know whether it's higher now or not, but either way, it's that value transacted that's the key part of valuing the network itself. So the market narrative for the last year has been inflation. Inflation with some elements of growth. That narrative is now changing as people realize growth is about to disappear from the economy. And we've started to see the weakening things like the ISM survey and many forward-looking indicators. I've just done a huge piece on Real Vision about this, about the forward growth is slowing dramatically. So we get this market, this position for inflation and an okay economy. Suddenly, you take economic growth and all positions start looking troublesome. So whether you're long commodities or you're long equities or you're long technology, everything gets blown up at the same time because the markets really struggle when you change the regime within the markets itself. Because if you think about it, one of the reasons crypto's not gone up is the fact that, and the networks are relatively slow, they've not grown in a while, it's because retail investors' income has not gone up as much as prices. So they've lost discretionary income. So therefore people can only dollar cost average less, can get less involved. So what we're seeing is activity within ETH, for example, where people are trading NFTs and that money stays within the ETH economy. And there's been some switching amongst Solana, AVAX, Luna, that kind of stuff. But the space isn't growing because of this issue with wages and inflation. So that dynamic needs to shift somewhat. When crypto rallies, you tend to get these kind of, 300 to 500% rallies in the bull legs. So, that's 150,000 in the next rally, let's say, if it goes up 5x, and then it corrects a bit and then it goes up again. It doesn't take long for the performance to compound. So, whether it's 3 years or 7 years makes no real difference to any of us. The point being is the long-term logarithmic trend of Bitcoin remains in place. And that trend will play out and how it plays out. But over time, we know where it's going. I don't not believe in the halving cycle. I just think it's less relevant as more players have come into the space. So it doesn't become the predominant driver, but one of the drivers. And as we talked about, macro is a big driver in the space that it never was before, because there are different participants in the market. The different participants, the institutional investors and the hedge fund investors, have also changed somewhat the structure of the markets. So that depends when they have availability of capital and they don't have availability of capital. So there's the market, as it broadens out in its ownership and participants, changes structure over time. But the key structure has always been the logarithmic network adoption model, which is Metcalfes Law. That is the key structure of markets. Whether there's a cyclicality based on the halving cycle or not, it's kind of largely irrelevant. What we're trying to say is, over time, adoption is everything. So I've done a lot of work on, okay, what are the predominant drivers of network effects? And I found that two variables explained most of price. They are the number of active addresses, but more importantly, the value transacted on the chain. So Bitcoin is valued more than Ethereum for two factors. There's slightly more wallets in Bitcoin, active wallets, but Ethereum's catching up very fast. And there is the value exchanged in Bitcoin is higher. So for example, we're seeing Terra Luna buying Bitcoin, big size. We see MicroStrategy's big size. These size of transactions mean that the value of the network, if you've got big transactions and a lot of people doing them, makes it more valuable. ETH has a lot more transactions than Bitcoin, but they're smaller in value. So the total value being exchanged on ETH is actually less than Bitcoin, even though the number of participants is I don't know whether it's higher now or not, but either way, it's that value transacted that's the key part of valuing the network itself. Metcalfes Law was the valuation model. Once you understood that, it was clear that Ethereum was growing faster as a network than Bitcoin. So that made my decision. It was very clear to me. Then I also noticed that the institutions had started becoming much more interested in Ethereum because of its broader base use case, that it wasn't just the money, it was the internet of value, and that was resonating. Web3 was resonating, and also DeFi was built essentially on Ethereum. And then the move to proof of stake is going to create a secure yielding instrument, which is very attractive to institutions in a world starved of yield. So there's a number of reasons why I really like Ethereum over Bitcoin at this junction in time. That may change in 3 years' time. It's unlikely to change for a while, however.